Key components of a successful asset liability management strategy. Asset liability management, or ALM, is critical for maintaining the financial health of any organization, particularly in the banking and financial sectors. An effective ALM strategy helps manage risks associated with liquidity, interest rates, and operational efficiency. Here are the key components that make a successful ALM strategy. Understanding the balance sheet. The first step in ALM is to have a comprehensive understanding of your organization's balance sheet. This includes knowing the current assets, liabilities, and the capital required to manage these effectively. Monitor your financial instruments regularly to evaluate their performance and risk exposure. Risk assessment. Identifying and assessing various risks is vital. Key risks include interest rate risk, liquidity risk, and credit risk. Interest rate risk arises from changes in interest rates that affect the value of assets and liabilities. Liquidity risk refers to the inability to meet cash flow obligations. Regular stress testing can help determine how these risks impact your organization under various scenarios, ensuring you are prepared for market fluctuations. Developing a risk appetite framework. Once risks are identified, establishing a risk appetite framework is crucial. This framework will help define how much risk your organization is willing to take in pursuit of its goals. It shapes decision-making processes and aligns your strategy with your organization's overarching objectives. Take into account factors such as regulatory requirements and market conditions while crafting this framework. Integration with business strategy. A successful ALM strategy must be integrated with the organization's broader business strategy. This alignment ensures that ALM contributes to achieving business goals, such as profitability and growth, while managing risk effectively. Regular communication between ALM teams and other departments streamlines this integration and enhances overall operational efficiency. Regular monitoring and reporting. A successful ALM strategy requires continuous monitoring and reporting to provide insights into performance. Implement a robust reporting system that allows for real-time tracking of asset and liability positions. Regular reviews of your ALM strategy should be conducted to ensure it remains relevant and effective in changing market conditions. Use dashboards and key performance indicators to highlight areas needing attention. Liquidity management. Effective liquidity management is a cornerstone of ALM. Your organization should maintain sufficient liquidity to meet short-term and long-term obligations. Implement strategies such as cash flow forecasting and establishing lines of credit. This allows you to anticipate cash needs and be prepared for potential liquidity shortfalls, minimizing risks associated with market disruptions. Interest rate risk management. Interest rate risk is an inherent component of ALM. Develop strategies for interest rate risk management, such as using derivatives like swaps or options to hedge against fluctuations. It's also essential to match the maturities of assets and liabilities to mitigate potential discord caused by interest rate changes. Regulatory compliance. Compliance with regulations is non-negotiable in a successful ALM strategy. Financial institutions must adhere to various regulatory guidelines that govern risk management practices. Stay updated with changes in regulations and ensure your ALM framework integrates these requirements to avoid potential legal issues and penalties. Regular training and development. Lastly, invest in ongoing training and development for your ALM team. Keeping your team informed about the latest tools, technologies, and market trends will enhance their ability to navigate complex financial landscapes. This investment in talent ultimately contributes to the success of your ALM strategy. Conclusion. A robust asset liability management strategy is integral to the financial stability of any organization. By focusing on these key components: understanding the balance sheet, risk assessment, developing a risk appetite framework, integrating with business strategy, regular monitoring, liquidity management, interest rate risk management, regulatory compliance, and continuous team development, you set your organization on a path to effective risk management and operational excellence. Ready to elevate your treasury expertise? Become a Global Banking Hub member to access exclusive courses, earn certificates, and get personalized feedback. Join now at www.globalbankinghub.com.